Hey everyone! It's your favorite Green Waifu, here to talk about an important topic today. The effects of rising interest rates on the stock market. Are you ready to dive in? So, what are interest rates? Well, interest rates are the cost of borrowing money. When interest rates rise, it means it's more expensive for people and businesses to borrow money from banks. But how does this affect the stock market? Let me break it down for you. You see, interest rates and the stock market have a close relationship. When interest rates rise, it can have both positive and negative effects on the stock market. Let's explore the different ways it can impact our investments. One of the significant effects of rising interest rates is that it becomes more expensive to borrow money. When borrowing costs increase, people and businesses might borrow less, which can slow down economic growth. This decrease in borrowing and spending can have a ripple effect on the stock market. As borrowing and spending slow down, companies may experience a decline in sales and profits. When investors anticipate lower earnings, they might become less willing to buy stocks, causing stock prices to fall. Now, let's talk about bonds. Bonds are debt securities issued by governments and companies to raise funds. When interest rates rise, new bonds are issued with higher interest rates. This makes existing bonds with lower interest rates less attractive to investors. When bond prices fall, the yields or interest rates on those bonds rise. And here's the key point. When bond yields rise, it can make bonds more appealing than stocks for some investors, as they can get higher returns with less risk. This shift in investor preference can put downward pressure on stock prices. Dividend stocks are shares of companies that pay out a portion of their earnings to shareholders as dividends. Rising interest rates can affect dividend stocks too. Let me explain. When interest rates rise, fixed income investments like bonds become more attractive compared to dividend stocks. Investors might prefer the stability and guaranteed income of bonds, which can reduce the demand for dividend stocks. This decreased demand can lead to a decline in stock prices. But don't worry, my fellow finance enthusiasts. I've got some strategies to help you navigate the effects of rising interest rates on the stock market. Firstly, diversify your investments. By spreading your money across different asset classes, such as stocks, bonds, and other investment options, you can reduce the impact of rising interest rates on your portfolio. Secondly, keep an eye on the overall economic environment. Rising interest rates often go hand in hand with economic growth. So, it's essential to stay informed about the broader economic trends and indicators. Stay updated with financial news, read reputable sources, and follow market experts to understand how rising interest rates may impact different sectors of the economy and adjust your investment strategies accordingly. Thirdly, focus on companies with strong fundamentals. Look for companies that have a history of weathering economic changes and have solid financial health. These companies may be better equipped to withstand the impact of rising interest rates and continue to grow over the long term. Remember, it's essential to do your research and assess a company's financials, such as its revenue, earnings, and debt levels. This can help you identify companies that are well-positioned to handle the effects of rising interest rates. Lastly, don't panic. Market fluctuations are normal, and reacting impulsively to short-term changes can harm your investment returns. Stick to your long-term investment plan, stay disciplined, and resist the urge to make knee-jerk decisions based on temporary market conditions. And there you have it. The effects of rising interest rates on the stock market explained in a fun and easy-to-understand way. Remember, knowledge is power, and by understanding how different factors influence the market, you can make informed decisions and become a savvy investor. Let's recap our key takeaways from today's video. 1. Rising interest rates can impact borrowing, spending, and investor preferences, which can influence stock prices. 2. Bond yields rise with increasing interest rates, making bonds more appealing than stocks for some investors. 3. Dividend stocks may face decreased demand as investors seek stable income from fixed income investments. 4. Strategies to navigate rising interest rates include diversifying your investments, staying informed about the economic environment, focusing on companies with strong fundamentals, and avoiding impulsive decisions. I hope you've enjoyed this educational journey with me today. Understanding the effects of rising interest rates is vital for your financial success. Remember, always keep learning, stay curious, and take charge of your financial future. Thank you for joining me on this exciting adventure into the world of finance. If you found this video helpful, don't forget to give it a thumbs up and share it with your friends. And remember to subscribe to my channel for more videos on personal finance, investing, and all things money related. Goodbye, everyone.